They have been lucky, absolutely, being part of your team, and they have been delivering, I'm sure, because the returns talk for themselves. D3 is definitely working. But, let me just begin by setting the big trend that everyone has been talking about. Mahesh, Bala talked about it as well. The biggest, mega trend right now globally is India, the land of opportunity that we are seeing here. So let me start with that, Dhaval, and Dhaval Shah at that. What do you think is the perhaps next trigger that we should watch out for India? Or more importantly, is there anything that can derail the India story?
Yeah, so if you look at the mega trends that we're trying to look at, we are really at an inflection point in every sense that we're trying to look at. So, first look at it from a perspective of our per capita income, and, we are closer to $2,500 odd of per capita that we're there today. And, history is full of instances where, economies which have crossed this kind of a per capita, there is a big impetus that goes towards consumer discretionary spend for incremental income that, every guy is generating. And that is where the next 10 years, largely, you will have a big delta change in consumer discretionary as a sector. And we think that is a must for all investors to kind of participate because, in the next, as Mr. Shaurya Dhaval was also pointing out, that even on a conservative approach, we are looking that, in the next 10 years, we could be $12,000 in terms of per capita. A lot of that incremental income will get spent on consumer discretionary items. So that's trend number one. Trend number two is what Mahesh was referring to in the morning was all about CAPEX and, led by, production link incentive plans, which is PLI and manufacturing, which started off with one sector, which is more particular into electronics, but is now to 14 plus sectors that has got implemented. And government is literally giving you good impetus for a lot of products where you can do import substitutes, as well as make India a hub for exports. And so we think that manufacturing is at a good cusp. We've tried over the last 2 to 3 decades, but not really been successful in terms of trying to do that. But from here on, it looks like manufacturing can actually see a very big pickup in the next 10 years that we're trying to look at. The third trend is really about, banking and financial services, where, if you look at individual sub-segments within that, you say housing market to the overall GDP of the, country, we are at a very low level, and from there for the next 10 years, we can continue to grow, higher than the nominal GDP growth rate. Similarly, an MSME segment, the total loan market is around 25 lakh crore, which is 14% of the overall loans that the banks and NBFCs in India give. But the overall requirement, which as per the CRISIL study is around 117 lakh crores. There is a 95 lakh crore kind of a gap. And clearly there are a lot of NBFCs and banks which are coming up with various models of how you can address that. And, that's a big trend where, you will find a lot of banks and NBFCs participating over the next 10 years. And lastly, it's all about digital where, a lot of new business cases are actually erupting, where you can actually participate and deliver various services as well as goods, be it in e-commerce, be it fintech, and various other models. And there is, of course, AI, which is coming up where, a lot of investments is going incrementally, which is good for the software industry per se, because, India has the largest base of software engineers to implement that, and at the same time can lead to productivity-led growth that we're trying to look at. So those are the, 4 mega trends which have been there. Risks, as always, is about trying to say that, we should not have a lopsided growth or only one of the engines picking up, because then, we try to typically falter on in terms of, the overall growth versus expectations. But it looks like the next decade is clearly of dominant Bharat, and that is where, these 4 mega trends should clearly pick up from here on.
Okay, dominant Bharat indeed. And you've set the context for me because we, of course, have your consumption expert, your BFSI expert, as well as the digital expert with me on the stage. Let me start with consumption then. Dhaval just articulated how the entire GDP is expected to expand and the impact it will have on consumption as well. But last 12 to 24 months, what's clearly done very well is affluent India. We have seen the urban consumption pick up like never before, luxury, premium, everything is doing well, but not true when it comes to the mass consumption. Do you think there's a reversal in place and hence the strategy now should be to tilt your portfolio towards mass versus urban?
Thank you for the question. And as Dhaval started up, as India crosses $2,500 per capita, we have seen that globally, the discretionary consumption starts to play out. Consumer consume, it's just the allocation of consumption budget. Recent NSSO survey, if you saw that in detail, the spend on food has gone down, but the spend on packaged food and processed food has increased. So there's a big trend that packaged food and processed food, which is a huge unorganized sector, and as people look for convenience, there are more women working in the office space we are seeing, and nuclearization as a space. So people will look for convenience as an option. So that's where the packaged food and convenience food will grow. The second thing, which you interestingly highlighted, the premium India is growing. And the premium India, I think, will continue to grow. Just to give you some numbers, today 97 million people have credit card. Swiggy and Zomato would have 30 million active users, 60 million would have downloaded Swiggy and Zomato, and we have the Nykaa 10 million active users. So if I look at number of people who traveled in airline last year, it was 150 million. But people who would have traveled one time would be around 30-40 million. So roughly, if I look at all the data and plot together, there are 50-60 million in India. People looking at here, mutual fund unique portfolio today would be in the range of 35 to 40 million unique portfolio, as in unique PAN card having mutual fund investor. If I look at all these 35 to 40 million are unique people in India who are consuming and who have arrived at a premium per capita income of $8,000 to $10,000. And this is going to quadruple in the next 4-5 years. So the premium consumer and premium consumption will continue to grow and continue to grow big time. And this trend is being seen across sector. Let me give you an example of auto. For example, a decade back, 23% of auto was SUV. Today, 50% of sales of auto is SUV. In drinks and spirits, people are waiting for drinks. Popular drinks today is not doing well in terms of volume growth. Last 5 years, if you look at volume growth, they has been struggling for volume growth. Whereas prestige and above volume growth in the entire spirit segment has been growing at double digit. Beauty and wellness, Hindustan Unilever, in fact, has taken a decision that they will have two categories. Beauty as a separate category and personal care as a separate category. Because after $2,500 per capita income, we have seen globally people spend on beauty will increase. So this premium consumers is going to grow big time and this trend is going to stay. Lastly, you touched upon a very interesting thing. Let me ask you a question. What's the population of India?
120 crore thereabouts?
No, sorry. It's last night when I was talking to my son, he told, Papa, you always talk about population of India is 130, 132 crore. In fact, the actual population of India is 142 crore. In last 7 years, believe me, we have added one Philippine. In last 4 years, we have added one Thailand. In last 3 years, we have added one Malaysia. Every year, we are adding 1 crore to our population. 1 crore is equivalent to 10 million people. That's the transacting customer of Nykaa. So imagine today in one of our panelists, he was talking about by 2100, China population is going to decline by 30%, whereas India would be still at 140 crore population. So that's where the consumption is just starting in India, and next 2 decade is going to be about consumption in India.
Yeah, absolutely. The entire population is increasing and hence the consumption will definitely increase. And so will financialization, right? And that's the next question to Dhaval. What's really stood out over the last, 12 months has been the PSU sector. That's been the mega trend that everybody, wanted to be a part of, has ridden on and had made good money on it. First, hand on heart, tell me, did you see it coming? A year ago, if I would have asked you, your fund is probably going to double in 12 months, would you have said yes?
The answer is no.
Okay, so what about the next 12 months? You got it wrong perhaps last 12 months. What about now, next 12 months?
So I'm in a happy space to have been wrong in the last 12 months. So what I think that's what we've tried mentioning since morning. First of all, good evening to everyone and thanks a lot for being patient enough to hear people like us for the whole day. Hopefully this is the last session and you guys will have a good evening. The important thing is to follow process, follow the thesis. I very well appreciate Mahesh and one of the fellow fund manager who started this, an NFO of this fund way back 3.5 years. So what we believed then is something we are believing in the sector today. Means we were looking at business valuations and the way they have the construct. The PSU companies, if you look at, they were losing market share in the previous decade. They were losing profits. Basically, few of them were making very high losses. And post-COVID or around COVID times, all these things have turned. So the most important thing is that the market share loss has stopped and they've started regaining that market share, whether it is banks, power sector. Then the new age within the PSU sector has been defense and railways, which has gone crazy with respect to the growth and with respect of visibility of possible growth in the next 5 years, 7 years. And definitely Make in India is also helping the concept as well as thesis. Then there were a lot of pockets of undervaluations or cheaper valuations with this sector. So if you would have asked me a same question last year, same time, I would have told you what is my way of managing the portfolio and construct. So we were very bullish on PSU banks, railways, defense, power sector, and more tactically on oil and gas last year. And that is how we managed portfolio, identifying few names, bottoms up, few names from top down sectoral point of view. The same question I can answer today, that next 12 months, PSU banks, we still continue to look reasonably doing well. They are into a reasonable credit cycle where there could be some margin pressures for entire banking sector, but PSU banks, because of lower LD ratios, can manage margins with credit costs still coming down only now. So they would have reasonably stronger credit cycle for the couple of years time frame, and there we can see what to do. Same as power sector. I think Ministry of Power has revised the outlook for power sector 3 times in the last 7-8 months. So the expectations of new power sector growth in the next 5 years, and not just renewables but also thermal, is a new element to think, which was not the case last year. Then, yes, the pockets of railways and defense, we believe the valuations have now become lopsided, as Dhaval mentioned earlier, that we have to always see risk and we have to see where are the lopsided growth as well as where are lopsided valuations. So, oil and gas again looks good. They've not done well in the last 2 years, despite sector giving 42% CAGR or our fund giving 42% CAGR returns in the last 3 years. So, these are pockets of growth or pockets of opportunity still there. I'm not good at thinking how the next 12 months return would be.
We trust.
And dipping into some breaking